Traders, welcome into this video. I want to cover what our current game plan is, what stocks we're watching going into next week, and the overall market conditions for swing trading breakouts. So I first wanted to talk about the market. The S&P 500 is doing pretty well. It's above all of its moving averages, and over the last 2 weeks, right, since I probably last updated you guys, it's been doing incredibly well, pushing new all-time highs. Growth stocks, on the other hand, which are the stocks we primarily trade because those are the higher ADR stocks, the faster movers, have been bleeding out. So we have a disconnect right now, and really what that is a rotation from growth stocks, the stocks that have been the best performers, to mega caps, to larger cap stocks that at this point represent safety, that represent stronger earnings and are less speculative. So this change has obviously taken away most of our opportunities in order to swing. There have been a few winners, but for the most part, there are really no trades. We've been on a little bit of a losing streak, which is fine because you take small losses and your winners are big. DVLT was our one winning trade over the last couple of weeks, which it was, the entire move was in one session or 2 sessions, but this is a 60+% move from our entry. So that's all we needed, 2 days. But again, it didn't have continuation, didn't have the strength to continue higher, which is the case for most breakouts right now. So my plan, before I get into any setups, my plan has been wait for a few stocks that have setups to actually break out and continue, and then we, look for opportunities. Then we will actually take some trades. For example, QS, or I should say until then, really we should be risk off. Cash right now is the best position. QS broke out on Friday, so this is a high volume breakout. This is pretty nice. I want to see if this continues. If this is dropping on Monday, we know that breakouts still just are not working, and this is kind of just a one-day thing, like some of the other stocks we've seen. And then also AMPX is starting to break out as well. So it broke out. I want to see if that follows through. So another thing we're kind of facing right now is there are setups, but there are many earnings in the upcoming week. So a lot of earnings coming out that obviously interferes with our potential to trade the stocks. So we're kind of navigating those two things. But right now, cash is the best position. It has been for the last few weeks. So if you're cash right now, you're winning because in terms of swing trading, really you're just going to bleed capital if you're trying to buy breakouts right now on the swing side. So let's keep that in mind before we get into the setups. So the first setup is Grail, G-R-A-L. This is a stock that's been doing really well, obviously. Nice ADR, 10 ADR. It's made of, sorry, camera's blocking my face, 31 to 91 in 2 months, right? So that's huge. That's a great move, and it's surfed the 10 EMA the entire way up, really. It has not even a single close below that EMA. So it's above it, obviously, and it has momentum, and it was developing a setup, right? Or it is developing a setup. Higher lows, and we have this key resistance level of about 92. It tried on Thursday and Friday, it tried to break out. I was considering the trades, but I did not take them because the risk reward was not good enough. It was decent, but it was not good enough. When the market is not hot and you're taking a trade, you need to really consider the risk reward, and it has to be excellent in order to take the trade. The risk reward is determined by the spread of your from your entry to exit. That spread will determine how many shares you could buy for a fixed level of risk. So in the case of Grail, I didn't think it was good enough on Thursday or Friday. Thursday, as you can see, it was extended. So if we had stop loss low of day, which was probably the valid stop loss, at these areas, or at this point, it was already too extended, and I wouldn't have been able to buy a lot of shares. And then on Friday, it was the same. It was less extended, but it still wasn't good enough for me. I wanted better. So now, what I really like about it now is that it's basically sitting at the key level, right? It closed at 91, 93. The key level is 92, just about. So if it's green on Monday, it's going to open up right at the key level. And this is going to make our stop loss very tight. So that is going to help us in possibly taking this trade because we're going to be able to most likely buy a lot of shares for the same level of risk that we would take on any trade, right? So our fixed risk, and it's relative to the size of your account, obviously. So on a trade like this, right now in these conditions, I would probably not take anything larger than 0.5% risk. So if your account is $10,000, 0.5% risk is $50, right? So I wouldn't risk any more than $50 on an upcoming trade. So SLNH, this is another stock that, in a way, camera's not focusing. Okay, so SLNH, this was, perceived as a breakout by some on Friday. And if you're on the hourly, you could see it, right? Broke out, right? But the volume wasn't high enough for me. I need high volume, I need a lot of strength, and it just wasn't there for me. So the next level that I would look for is this level right here. I think this was pivotal. And also it tapped it again on the 24th. I would say 384, 385. It tapped that level again, pulled back, And so it's going to retest that level. Basically, I'm looking for potential areas of resistance where if the stock actually breaks out of that level with strong volume, that is what, then I say to myself, okay, this is the breakout, right? It's really, the volume is really key, because if a lot of buyers are not stepping in, then you don't really have a breakout. You just have a stock that's crossing a formerly important or a former area of resistance. There's a difference. The breakout has to be explosive. It has to be, accompanied by strong volume, really. Unless we're in just a hot market where everything is working, and then you could anticipate breakouts. You can basically do anything, and you're gonna make money. That's the great thing. So really, it's about trading the best markets, and it's avoiding and knowing when to take your foot off the gas. Right now, we're kind of in a mixed zone because seasonally we're entering the strongest period of the year, and the markets typically bottom on October 27th. So we're kind of in the beginning of the strongest part of the year seasonally. So we're kind of trying to figure out, okay, when is it time to really strike? When is it time to really go back to risk on? Because the last couple of months were really good, and the last few weeks have not been that good. We haven't had as many opportunities. So we're just in the middle right now of two strong points of the year. So anyway, we're just balancing that. Okay, so Wolf, LAES first. So I would say the key level here is 775. So this is another stock, really strong performer, goes from 259 all the way to a high of 870 in a couple months, and then, this isn't a month. And then since it's kind of been pulling back, a little bit of a wedge, obviously, we found some support, built some strength, tightened up, and then it started to break out on Friday. The volume for me wasn't good enough, that's why I didn't take it, but as you can see on the hourly here, it's breaking out, right, out of that little wedge. But in my opinion, this is really the most important area, because this, right, if you go to the hourly, you can see it even better. There's a lot of resistance right here, this key level. So if you break that level with strong volume, then I think this is going to be a good trade, right? We haven't really seen stocks work yet in the last couple of weeks, but I think we're getting close. Let's see how QS does. Let's see how AMPX does. If AMPX and QS are also green on Monday, and this is breaking the key level, I would really want to take this trade. Okay, so Wolf, this is another stock I like a lot right now. So let's break it down. The key level for me here it's pretty simple. It's just these highs. There's two levels, but I don't think big volume is going to follow this. So I really think the key level is 1620. Right, so breaking out of these highs. There's other areas if you drop the time frame where it has the potential to break out, like right here, 1554. So that is a considerably lower level. But I think it's better to just wait for this stock to get back to those highs and then try the breakout. We'll look to see what the volume is doing, but I think above 1620 is where this stock can really launch to the next level. So QBTS, let me adjust that. Yeah, the key level for me on QBTS is about 37.7, 37.8. I think that getting out of this area of resistance could send the stock back to highs, which is not like a massive move. This is kind of like a base hit, just a solid trade. But from there, if you take some profits into this strength, and then you go from there. You see how it's holding up, right? So I took QBTS on this breakout here. From the same, I basically bought it at 36, sold the majority at 45, and I saw it getting weaker, and you just cut it. So that's just how it works. But sell some into strength and go from there. I don't think this is going to be a home run trade or anything, but it could be a solid base hit. NUAI, I think, is the, let me adjust this line. NUAI is the best setup I see right now. So if you break it down to the hourly, this is an area that it tried to break out a few times, tried to break out of this little wedge, and got stopped at the 1620 key level. So it can break out of this, but I really think the key breakout is over that 1620 level. This was the previous high. It tried to break it a few more times, it couldn't, and we're here now. So NUAI, monster move, right, from 36 cents to $6. I mean, this is the strongest stock I can find, like in terms of making the largest move. The ADR is massive. It's tightening up. It found support off of the 10 EMA, and it's pretty much bottomed out at 540. This stock is looking really good. So the volume is low, right? That's why I didn't take any breakout attempt on this. The volume was too low. But if the volume can jump on a break of any of these key levels, I really wanted this stock. I think the risk to reward can be really good, given the ADR of this stock. I mean, this is a stock that could double again in a few days, given maybe the right catalyst, given the right external environment. But this stock has obviously shown that it can double several times over. Obviously, as it's climbing, it gets harder to double. But from 6 to 12 on a stock that's made just a 500+% move is, very much possible. All right, so I like this stock a lot. EOSE, this is an okay setup. It's not crazy good or anything, but I think there's a better way. I drew these lines a few days ago. This is probably the better way to look at it at this point. But, you know, it's been a strong stock. It's reclaiming moving averages here. Has earnings in a couple days, so that's probably why I'm not trading this stock. But it's just one to watch. Obviously, this has been one of the better performers recently, and it's since kind of just been chopping. This is kind of the story of growth, right? It peaked. You had the news event where Trump said he's raising the tariffs on China to 100%. That got taken away almost immediately the next day. But that is when growth stocks peaked, right? Leading up to that. And since then, it's just been chopping around. So this is pretty much this is growth stocks in a nutshell. Just incredible move for a month, and then pretty much just chop, slide, and now it's trying to regain some traction. So we'll see. Earnings are really important as well. I mean, there's a lot of earnings across the board, and I think it is going to set the tone for a lot of stocks. ASTS has been a great mover recently, and then obviously, like many growth stocks, it's pulled back. But this is not like an incredible setup by any means, but I really like the tightness here. It's super tight. I think you can get a really nice risk-reward trade on this. Just a base hit, right? Popping back up maybe to these highs or maybe slightly below them. This is a solid base hit. If you're only risking like $3 of risk on this trade, and you have 10 plus upside, that's not bad. It's a solid base hit, and then from there you leave runners potentially, and those can make a nice move. Earnings are coming up on the 10th, so there is enough time to trade this still, but it is creeping up. Ballard Power, I think the key level here is about 360. It's tightening up. It's been consolidating here. It's got support. I like this stock. It really just needs some volume over a key level, and I think it's a solid base hit trade. This has home run potential, but I don't think it will be. There really isn't anything in this video that has like that home run potential other than which stock? It was NUAI. That's right. NUAI has that home run potential. Everything else, I would probably say no. But anyway, let's finish this video off. Lemonade. This is a good weekly setup. As you can see, it's approaching that key level. Lemonade, I would probably give it more slack. The stock likes to chop around, but the larger swings have been pretty good on this. If you follow with the weekly setup, I think this is going to be a beneficial trade. It usually does really good every Q4, and I think once it pokes through this key level, some nice volume, this stock can actually double pretty quickly. This is a stock that really moves well when it has momentum. It's one of the best movers, I would say, when it has momentum. And then lastly, we have IREN. So IREN is like most growth stocks. Great move, pulls back significantly, chopping, and now it's starting to regain some traction. Look how tight it is with those moving averages. I really like that. Above both moving averages, but really tight. The risk reward on this is going to be really nice, and I think this is a trade that can target the highs and then break to new highs. It's been one of the strongest stocks. It's the data center, crypto, miner relation, right? So that's obviously been like the best trade of the last 2 months. Those anything data center, anything AI, and then mixing in Bitcoin and crypto, which Bitcoin has not it hasn't performed well recently. It's kind of just chopping away. But the idea behind the miners as data centers is that, okay, these are already profitable corporations, right? They're making profit. And they also have the duality of being data centers, but they already have a profitable business model. So I think that's kind of the biggest attraction to these. But the setup is good. It's a good setup. If the risk reward is there and we're seeing some strength come back into the market for growth stocks, then absolutely, I would definitely like to trade many of these. IWM is kind of the gauge right now for us because it is underperforming the S&P 500 recently, below both moving averages just about, while the S&P 500 is above both. So this kind of encapsulates most of the stocks we trade versus the S&P 500, which obviously is larger corporations, which we're not really trading anything in the S&P 500, other than stocks like Robinhood, which are new additions, and those are still kind of growth stocks. But anyway, IWM has been struggling. We're just looking for the money to flow back into growth, right? There's been a rotation out of it. We want to see the rotation back in. And when that comes back, we will take advantage of the setups that we are finding, and they will be good trades. So anyway, guys, thank you so much. If you are interested in learning more and following my trades, go to the Discord. It is in the link in bio. Follow me on X. Thank you guys for watching. Have a good